Good afternoon. Welcome to the Option Pit Trade Idea of the Week. Reminder, this is not investment advice. This is for educational purposes only. Consult your investment professional. Don't forget, we've got our calendar course starting tomorrow at 8:30 Central, 9:30 Eastern Time with high class, high tech Andrew Giovinazzi leading the way, followed by the wonderful Mr. Me. This is Mark Sebastian. I am the founder of this company. Let's talk about my trade idea. So something kind of interesting popped on my screen today. I was looking at VIX, all right? And VIX is around 12. So if you pull up a chart of VIX, you'll see that, it's low, but it's been lower. All right. Now, one name that has not, take a look at SPY. So now, SPY and VIX generally have volatilities that correlate. However, there are certain calculations that can cause that not to happen, and we're actually at the lowest volatility in SPY this year, in the last 52 weeks, and we're sitting right off the all-time high. What that tells me is too many people are selling covered calls, too many people are overwriting, selling puts, you name it. All right, so I am guessing that we are getting set up for a pop in SPY. All right, and as looking at this curve, all right, so I think SPY is going to move, I think probably higher. Looking at this curve, so let's pull up the skew chart. We're just going to go slightly out of the, we'll go look out at. So I want you to kind of take a look at, this is kind of 10% SPY, and you can see kind of at the money, you can see how much more expensive September is than everything else. All right, and that's probably because of people worried about Fed. I think we're going to get a clear sign that the Fed's not raising rates or is raising rates well ahead of time. So there's really no reason to pay that 2-point spread. So what I would do is go into August. I'm going to look at August, and stuff is cheap. All right, so I could pay $10.60 for August. I might look at that as like a little calendar spread right there. Or I can go 2 weeks and pay under 10, or even a couple of days. All right, next week's vol is so low, it's below 8%. And I understand implied volatility has been low, but I think 8% is too cheap. I think paying under $1 for an at-the-money call that expires next week is way too inexpensive. And so because of that, I'm going to work to buy one call for 96 cents. And I think that this is a very simple trade. I might convert it into a call spread, something like that. But all I need is a little bit of a pop on Monday, and this is going to quickly be a profitable trade. And I don't mean a lot. I mean like 40, 50 cents. So this is one that I might close in a matter of days, maybe a day or two. This is not a, I don't want to be carrying this into Wednesday because it's a weekly. All right, and that's how I'm going to fill. And I'm going to pay, 96, 97 cents, anywhere less than $1. I'm going to be relatively happy with this spread. So on that note, there you go. I paid 97 cents. I hope everybody has a great week. If you're wondering what happened last week, Lululemon, my coach trade is up nicely. Lululemon has been, has performed really well. So all of these trades, sans Kellogg's is going to be the first weekly trade that we've done, or I've done, that is going to be a loser. All right. So that's kind of my trade idea. So, and people are wondering what strike. I'm doing the July expiring next week, 212 call, and I paid 97 cents. I bought 8.1 volatility. 8.1% volatility. I just think that's too expensive for me. Too inexpensive for me not to purchase. All right, folks. Hope everybody has a great week. Again, our calendar course starts tomorrow, so take the advantage to take advantage of that that great $147 price. Have a great day, everybody.